Welcome to TheoTrade. This is Don Kaufman. It's August 7th, 2017, doing the Theo Night video. First and foremost, well, we got one thing right on the weekend update, and that's this. The Nasdaq, well, it hasn't disappointed us in terms of movement. So the NQ today is going to finish the day up about 36 points. Now, I'll remind you on the weekend update, I was talking about buying premium, specifically buying premium in the QQQ. And for those of you unaware, if you do take a look at the Qs today, and this is on a daily chart, you will see the Qs with a strong start, obviously, to the week. All right, moving forward from there, I have to say, and this is a little different than I would typically do on one of these evening videos, but I have to say today would most definitely be one of the more peculiar intraday trading sessions, people, that I've ever seen. And I've been in this business, now almost 20 years, and I watch a lot of intraday trade. And I've sat here today, I was actually working on answering some emails and so forth. I sat here today and I watched a lot of the intraday trade, but let me show you exactly what I'm talking about. Because first of all, you talk about like a dull day. All right, so the Nasdaq got heated up. The S&Ps are up about 6. But what was peculiar in the trading day? First and foremost, okay, these are ticks. All right, what does that really mean? Well, for those of you that don't necessarily trade on an intraday basis, okay, ticks. For example, the S&P 500, you have about 500 stocks. If the S&P 500 is having down ticks, that means the actual components of the S&P 500. If they're having down ticks, that would accumulate, of course, as negative ticks, right? Well, what you have here, and I'm going to be very, very specific about what is on this this chart. This is what we call the TheoTrade comparative quantics. This happens to be none other than the Russell versus the Nasdaq versus the NYSE, the New York Stock Exchange versus the S&P 500. What I want to show you over here, and again, it's just a comparative analysis of the ticks. So we're just adding up ticks from tick to tick, right? We're adding them up. The one interesting thing, the ticks today, they're down. And these little like white, okay, dots inside of the colored bars, that's indicative of a downtick. Then if I zoom in really, really tight, okay, these little red hash marks over here, yep, those red hash marks are indicative of all 4, okay, of the products having downticks simultaneously. Now, why is this a little bit peculiar? Well, it's peculiar because the S&Ps are actually up 6, the Nasdaq futures are up 35, and people, we saw nothing but downticks today. Prototypically, you see this many downticks. Like like stocks are downticking. People are selling something over here. Okay, what are they selling? So I go over and I look at the financials. The financials are down a whopping 4 cents, but it's also peculiar that you see a marketplace. We're about to close right now, but you see a marketplace that ends up 5. Well, the financials aren't helping it. Those are slightly down today, right? What else do you have? Okay, you have energy sector. The energy sector, that's definitely not helping today because that's down as well. You look at Google, for the most part, it's relatively unchanged. Okay, you've actually got Microsoft down on the day. So if you're looking for the, the fearsome, 5 stocks to explain why the Nasdaq is up, well, that's inexplicable because it's not there. The Nasdaq futures are trading up 34 points. Wait, it gets better. If you look at the advanced decline line, there's the closing bell. But if you look at the advanced decline line, it ain't great. It's 57, underlyings that are up to 45 declining over here. The S&P 500 is basically a wash. There's nothing huge going on in there. This goes on and on. Looking at the trade today, you have to be quite curious as to what specifically is bringing the market back up. And all of a sudden, you just have to start to point a finger. You're like, okay, we're getting past the theater of the absurd, as Jeff Bierman, one of our counterparts here at TheoTrade would say. It's the theater of the absurd. You have Apple up about 1.4% and Facebook up about 1.4%. And people, in terms of a large market cap, not even Amazon is really in cahoots today with the rest of the market. Amazon's, up about 0.5% today. So fairly peculiar day where we have 2 stocks that are effectively driving a huge amount of the Nasdaq futures. Wait, I'm not done yet. It gets even weirder for today. We're finishing the trading session with 550,000 contracts having traded in the S&P futures. Now, I have been watching S&P futures for basically since the S&P futures came out. And what I mean, what do you mean when they came out? When they originally came out, the S&P E-mini contracts in the 1990s, that's when I first started trading. And I've watched a lot of trading sessions, and I've watched a lot of half days. Like if you come in here, like this is like right around Christmas time, right? Look at that. That was a half a trading session, and we even did more contract size. This over here, again, you know, holiday kind of sessions. But in light of some of the holiday sessions, you have to realize we did just over 500,000 contracts. There is nobody participating right now in the order flow. That isn't just peculiar. It's downright strange, odd, whatever you want to call it over here. You're seeing a grind to the upside. There's no liquidity behind it. I took a look at the spiders, one of the largest ETFs, and was shocked when I saw not even 30 million shares had actually traded inside of the spiders today. Okay. You know, where does that leave us? You know, you really, first of all, if you're short, you got smoked today, right? That's easy enough. All right. Where does it leave us? If you're short, you got smoked, because in the end, all this volume and like absurdity, it doesn't mean anything. Hey, look, the Nasdaq futures are up 40. That's why I talked about buying premium. All right, buying premium was the place to be, you know, early in the week. Hopefully some people, you know, took that and went out and bought premium early this morning. However, where does it leave us for the remainder of the week? One thing I'd be looking at very, very carefully as the week progresses here, is there volume coming back in? On days like this where there's literally no liquidity, I almost have to negate that in my head. I mean, 500,000 contracts, there's a lot of trading sessions. Well, I'll come in to work in the morning, and there's 500,000 contracts trading in the pre-market. So you're looking at this, and if you know, you haven't heard, hey, there's low volatility, newsflash. Of course there's low volatility right now, but now we have low volatility coupled with absolutely no trading activity. And therein lies a recipe for disaster if there's any news announcements. Okay, again, this is a marketplace right now. You know, what does this really amount to? It's a marketplace. You do not want to go out and sell premium. You know, people are constantly sending me emails like, hey, should I sell some puts on a couple of stocks today? You're selling puts into a no liquidity environment, okay, that has no volatility. Nothing good can come out of that in the end. And that's going to be kind of the big takeaway for, you know, today's kind of evening video here. Shy away from selling premium. One of the things I want to key into here is the XLF. Are we starting to roll over? Okay. The XLF, it has not had really and truly a down day. This is only a 4-cent move. This is the product, okay, right here, the XLF. The next move of the XLF drives the S&Ps. I'm going to make that clear. The next move of the XLF specifically drives the S&Ps. Any bid, that basically means anything above about 2550, we're a clean shot for the S&Ps to 2500. If the XLF starts to back off in the background, okay, and that ultimately means if you see the XLF start coming back down in the neighborhood here, you know, 2520, 2510, even 25, and if you're seeing that occur without the S&Ps moving, it's a big time setup, okay, to be short the S&Ps effectively because they're being degraded, all right, initially by, again, the XLF. XLF is really going to define the next move inside of the S&Ps. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.